Good morning. This is Jeff Killian, Chief Market Strategist for the Inside Technician, broadcasting out to everyone today at 8:12 a.m. Eastern Standard. Today is June 21st, 2013. We are in a real-time trade in right here. Mark to the market. We are now trading at 1591.50, 1591.75. 30 contracts traded short after an up move in the overnight session after yesterday's large sell-off. Again, 30 contracts short. Let's find the data box so everyone can view this. Just down here. We're looking for the quarter of a point move to close below this level here. That happened in this 1 minute bar. This 1 minute bar never faded back up to get a better fill. So the ideal situation was to get in. The volume that has shown up now will act as the reason for prices to get to a lower level. Again, we are trading in real time the S&P 500 mini futures. The near month, September 2013. We are in an all quiet environment. I see the sheet. $15.92. Hold right here, 15.92. Even. Trading in real time, Jeff Killian, Chief Market Strategist for the Inside Technicians. It's going to go out to everyone. Let's talk about 15-minute charts here and the reality price profit targets setup that came to play. Had a stair-step down approach, a lot of profitable trades in the last few days in the major market soft that we called way back here because of three lows in the 15-minute charts. In short again, more contracts traded 50 here down to this level. Now, things have ceased here. Prices moved up in the overnight session. We had a peak here. We had a major negative divergence out of the longer-term check-in money flow here, and then better yet, the secondary closer to the more and most recent price action before this move fell off to the downside. Actually, that divergence was finished approximately here. Okay, and looking next here, simple trend line violation here I had analyzed. We had a superior resistance here laid out by this bar. This bar was on a 15-minute chart at 15 hours. Stock had, MACD indicator clearly fired before the level was broken, just shortly before the trend line violation here. Another negative divergence, very strong negative divergence out of money flow would be this peak. Okay. this peak as compared to here, and relative comparison, this peak is compared to these prices, this peak is compared to these prices here. It's obvious that we had a substantial negative divergence in this case, right here. Now, stochastics was the leading indicator in this case. After forming an official negative divergence again, we're talking about a true high probability trade setup here. In this case, this indicator at the upper region here, also additional confirmation to the downside right out of the chart pattern. Longer term trend lines connected by this through and this through right here. Here we have it. Trading real time, mark to the market, 1591.75 is the price, 1591.75 in a 15-minute chart. S&P 500 E-mini futures, strong market sell-off yesterday and close. Overnight session gaps up, trades up slowly here. Multiple indicators firing in multiple time frames, looking for the smart money here to come in. That smart money showed up at this point right here for a sell, and another confirmation here after the level was crossed. The initial level on the 1-minute chart was located at this point. The secondary, waiting for price to get through, was right here because of this open right here. That finally happened here on this bar where we got in at this point at 1592 even for 30 contracts. Now prices are temporarily stalling right here, and we have more volume here that's added a reason to stay in this trade to the short side. Let's look at some viable price profit targets here on a 1-minute chart. First thing to the downside right here, we have something set up right at about this level right here. This level, as laid out by these bars, will be approximately on a close of 4:22 a.m. where 464 contracts are traded. 1590.75, 1590.75 in at 1592 for 30 contracts short. Looking for the 3-to-1 risk-reward ratio based on the price chart pattern as compared to the price profit target. We need more. Getting back to the next level to the downside, very little resistance all the way down here. An excellent chart pattern on this stair step all the way up. So right away I'm taking a look here at the previous data as compared to the interlocking of all these bars, and I'm going to go right into here at this point and take a look at this level. Low might hit this on a rally on the way down. This level is being established by these prices here in and around here in the neighborhood of 1589.50, 1589.75. That would be more than enough to walk with 3 points on this trade. $15.89.75. Let's make that the preferred price profit target. Okay, more than likely, this will become an incremental price profit target right here, an incremental level being a level where prices will find because of previous prices laid out here at this pivot point low and then traded up from to the upside. And prices will hit here and then stall out, trade back up, trade sideways with more volume coming in to push the prices through this floor and get down to 1589.75. So getting in here at 1592 even, got it. Yep. That would be a 2.25 gain on the trade. Now, mark to the market, we're at 8:24 a.m. Eastern Standard Time. Today is June 21st, 2013. The price is trading 1591.50. And we're looking for more volume to come in to push these prices down to the incremental level located right here. That level right here is essentially closed 4:22 a.m. Yeah, 1590. Here we go. This is what we need. Here we go. More real money coming into the downside. And let's see how prices react to 1589.75. Jeff Killian, Chief Market Strategist for the InsideTechnician.com. Nightly Market Intelligence Report. Expert Market Timing Course. S&P 500 Elite Trader Training Course available to everyone who wants to learn how to trade like this. Very little resistance between here and here. Looking to get to this level on a rally for 30 contracts. Book the profit. Mark to the market. Price is trading at 1590.75, 1590.75, 8:25 a.m. Eastern, June 21st, 2013. In a short move, filled at 1592, even for 30 contracts. Trading the S&P 500 E-mini futures near month, September 2013. Oh, quiet environment. On the odds that the prices may hit this at a quarter point above the larger, more profound support levels laid out by these prices, we could be at a quarter point higher or the exact number that we're looking for. Let's see how these prices play themselves out. I'm getting closer now. We do have the volume. We are heading closer to a market opening, or 8:27 a.m. The price is trading 1590.50. June 21st, 2013. Real-time trade we're into right now from the short side, getting in Filled at 1592, 30 contracts right here after crossing through major floor level here, quarter point down for the end, a quarter point below that point, and finally filled right here, fast moving bar. I never had a retracement up on a 1 minute clock. Filled 1592, 30 contracts. And there we are. Let's take a look at the 15-minute indicators. Momentum is still largely to the downside. No need to get out of this trade yet. Looking at the shake and money flow, longer-term perspective here, we were about here at this point when the trade was taken. So we are good. We're staying here. Stochastics disparity is widening. Excuse me, on the MAC disparity widening at this point after the trend line violation hits superior resistance at this level. Prices turned back around at that point. The trend line violation and the MACD fires just before that violation took place. Here, more downward momentum here out of the shorter term money flow index here. A lot of room to go here, getting down to the negative 50 level. Excellent run out of the stochastics momentum index to the downside. Momentum is clearly full on. EMA's crossed well before the entry point. Let's get this in here so everybody can see it. Here we are. Again, you're looking at a real-time trade taken by myself for the inside technician. We're filled here, right here at this red line at 1592 even. The fill was 8:12 a.m. Let's put it in. This is the same process. I present a complete rundown of all the trades that are taken that we will provide you with on the Nightly Market Intelligence Report. That's the report that's broadcasted out 5 nights a week to all subscribers. There is a 14-day risk-free trial and then a small monthly fee. Now it's clear that we have more momentum to the downside here. Volume is coming in. We're just there at 1589.75 right now, and so this is an excellent trade that we got into at 1592 flat for 30 contracts, and now we are there at 1589.75. It's 2.25, getting right through that level. It appears at this time. And we're going to take that 30 contracts off the board now. Yeah, I see it. I see it. Yeah? Yeah, we got it. Okay. Yeah, we're out of this trade, and actually we got a better fill than expected. Yeah, I understand. Yep. Okay. Getting confirmation right now. Yes. I understand. Yeah. We'll report that. Can I get that? Yeah. Yes, I understand. Okay. So we were filled here at 1589 flat. A better fill than we had expected on a large bar down here. These prices may continue to move down. But in this case, getting out on a rally is what we teach here, especially for the new person, because at these price points, clearly laid out in advance, you have a better opportunity to lock in a profit. And as your skill level grows, you can stay in these trades. It was my opinion at this time that this was the best area to be out. With the gap down here, at this point, from here to here, a decision was made to hang on a few more seconds here. And so, as you saw, this bar moved right down. And we're filled at 1589 at 833. Let's get that in there. Correction here at 1589 at 833. Which in fact was the right thing to do, because prices are starting to trade back up here. They may linger for a while. This was really the move that I was looking at today. Again, as we review this trade, we can see clearly that we had the MAs that had fired. We have clear trend line violation within the stochastics momentum indicator itself after the cross, after the negative divergence, creating even another confirmation of prices moving into the apex of the channel itself. It's provided by this rising wedge. Now, as we look at the shorter-term money flow index, there was a major negative divergence compared to this price peak area, and then a trend line violation, another one here. So from a short-term perspective, it was an excellent call. Here, the MACD, the lagging indicator, had clearly fired before the level was broken and the trend line. So this is really the essence of high probability trading. These prices may continue to trade down, even all the way back down to this point. But as the time horizon of the trade lengthens, the possibilities of the volatility changing not in your favor increase. So therefore, from a professional's perspective, it is always to get out with a locking in a profit at a price profit target. Again, in this case, and we'll report this on tonight's Nightly Market Intelligence Report, we were in at 1592 flat, and out at 1589. And so there you have it. We have a 3-point gain. And that's 3 points times $50 for every full point move. Is a net gain of $150 for every contract traded. And then $150 simply times 30 contracts. And again, price is trading down. This really is, the type of trading that we teach here so that everyone can understand what it is to find, track, and trade with the smart money. Yep, I see it. I'll take that now. Yeah. Uh-huh. Yeah. Yeah, I see it. Yeah, I'm just putting this in so everybody can see. We're going to go eat. Here we have it, 3-point gain on the trade. I brought in 150 per contract times 30 contracts traded was 4,500 net gain for this trade. We have the nightly market intelligence report to follow along with this 5 nights a week. Again, a 14-day risk-free trial, and then a small monthly fee. No contracts, no commitments. The S&P 500 E-mini professional trading course and the expert market timing course, all from our website here at the Inside Technician. Yeah, I'll get it in. I will get it in. Mm-hmm. Yeah. Mm-hmm. Yeah. We got it. Okay. Yeah. There we have it. So it's my pleasure to present this real-time trade to you, showing one more actual, factual, in-the-moment, real-time trade taken by myself, Jeff Killian, Chief Market Strategist for the InsideTechnician.com. We'll see you again on the next Nightly Market Intelligence Report. We look forward to working with all of you who really aspire to become real-life profitable traders and helping you get where you need to go. We'll see you again on the next Nightly Market Intelligence Report. Have a great day.